tell you, traders watched as the Dow swung nearly 400 points today, up and down. If you're worried about all the volatility, our next guest says income-producing stocks are the way to go.
Income producing. All right, he's going to define that. Stan Crouch is the Chief Investment Officer at Aegis Capital. Good to see you, Stanley.
Good afternoon. Good to see you.
Okay, give us your definition of income producing.
Income producing is anything that pays on your investment.
Dividend yield.
Dividend yields, bonds, other instruments. But what we're worried about is sustainability. That's our watchword. We are looking for entities that have the margins to be able to sustain the payouts, whether it be bonds or equity. So we're looking at conservative balance sheets.
Are you saying, though, that gold is less sustainable than corporate profits? Because it sounds to me like if you identify some corporate names that you like that pay a good dividend yield, you take those over gold.
Well, yes. And the reason gold doesn't qualify in our models is gold does not pay anything. Gold actually costs you to own. Now, it's made a tremendous run. On the other hand, there are other ways to access proxies that get you a dividend cash flow that still have some relationship to gold.
Okay, so you're not a big gold fan at the moment because it doesn't fit into that. What about, say, for example, and look, it's almost sounding like a broken record to say Apple. Apple has done so well. Apple. What about Apple?
Well, we hope that Apple would start paying a dividend. They've got ample liquidity and cash flow to do so.
Yes.
And our view is that Apple could easily pay a 3 to 4% dividend and not skip a beat.
Oh, they won't, though. They consider themselves a growth stock still.
They do, but here's what Peter Lynch, remember him way back when? Peter Lynch was a pretty wise
Tier
investor.
1 imports, Peter Lynch. Okay.
Wise investor, but he famously, among his many quotes, once quipped, he said, companies that use free operating cash flow to acquire other companies rarely succeed in such ventures. And the same thing goes for stock buybacks, because when managers buy back the stock, it's usually when they're flush. When they're flush is usually when the stocks have performed well because their performance is good. So they tend to end up buying the stocks at the higher levels.
You know, the one thing, too, when you talk about the yield, I've seen yield on so many really high-quality blue-chip names higher than I can ever remember seeing it. I mean, Altria is paying 6% right now. AT&T at 6% right now. Is that a red? Yeah, is that a red flag for you, or are they just undervalued right now relative to the yield?
Well, it's a combination, but I think what's required is real fundamental analysis. Again, we're back to income statements. What is the coverage of the dividend? How much margin does it have? How much can it withstand in terms of hits to its net operating income and still maintain that dividend? And the balance sheet, the leverage. Does it have other things in front of that dividend, whether they be bonds, bank financings, or preferreds that come first?
You don't tend, Stan, to say, I'm buying such and such a stock, or say, for example, Heinz. You don't say, because then everybody will jump on, I'm buying Heinz, wait, what happened? It fell the next day. You buy ETFs? Is that how you do it?
Well, there's some ETFs. What we like to do is be light on a couple of sectors that we're a little bit concerned about. Those are income producers like REITs and master limited partnerships, MLPs. Those pay a high dividend, but I think we have to be careful about the level of the dividend and how it's derived, and look underneath that and see, is it sustainable? Because we believe, like today's roller coaster, we're in for a few more, I won't call them joy rides, but let's say we're still at the theme park and it's news and event driven, and you can't quantify event risk. It's that simple.
Got it. Stan Crouch, good to see you. Thank you for joining us.
Great. Thank you very much. Pleasure.